Public sector workers and private sector employees at the management and supervisory levels in areas under the conditional MCO are ordered to work from home starting this Thursday, October 22nd. This was announced by Senior Minister for Security Cluster Datuk Sri Ismail Sabri Yaakob and will be enforced until the end of the CMCO in affected areas. Currently, those areas are the whole of Kuala Lumpur, Putrajaya, Selangor as well as Sabah and Labuan. Ismail Sabri said the decision was made during a National Security Council meeting chaired by the Prime Minister after taking into account that there have been at least 9 clusters involving Selangor workplaces. According to Ismail Sabri, this will affect 800,000 workers in the industry sector and 200,000 civil servants. Meanwhile, employees staying in red zones are to undergo swab tests with SOCSO covering the costs. Malaysia recorded 862 new COVID-19 cases today, bringing the total infections to date to 22,225. Health Ministry's Director General Tan Sri Dr. Noor Hisham Abdullah said there were 3 new deaths in Sabah, raising the death toll to 193. 634 COVID-19 patients have recovered meanwhile, putting the country's total recoveries at 14,351. AirAsia Group Chief Tan Sri Tony Fernandes says the COVID-19 crisis has forced the budget airline to seek financial support from the government for the first time in the almost 2 decades of its operations. According to a Financial Times interview, Fernandes says this is entirely due to COVID-19, which has decimated global travel demand. Fernandes also admitted to the FT that AirAsia could exit more markets, but adds that point hasn't arisen yet for its remaining 5 airlines. Most recently, AirAsia Japan ceased operations. However, it should be noted that the Finance Ministry had on October 13th denied approving any loan or guarantee to any airline in response to a report that AirAsia had secured financial help from the government. Meanwhile, Fernandes says AirAsia is banking on its new super app, a one-stop travel, e-commerce and fintech platform to keep the company afloat. Services on the app are expected to be expanded from Malaysia to other parts of Southeast Asia in the next 3 months. FGV Holdings has denied the Federal Land Development Authority's statement that it deserves to pocket 800 million ringgit a year from their land lease agreement. FGV said in the statement that based on the LLA, the amount payable to Felda is 248 million ringgit a year on top of 15% of operating profit. FGV adds that its responsibility to Felda has been fully met and that in total it has paid more than 2.5 billion ringgit from 2012 to 2019. The listed plantation group said that Felda had yet to contact it on possibly negotiating the LLA, adding that contract termination is an option. FGV also disputed Felda's claim that prior to the IPO, Felda had made over 1 billion ringgit in profit but suffered losses every year after FGV was listed. FGV bluntly rebuked that while its IPO is often blamed for Felda's shortcomings, the real issue is the use of revenue from the IPO. It explained that Felda earned 5.7 billion ringgit from the IPO, while FGV earned 4.5 billion ringgit, although it admitted that the money was badly invested. Trading volume across Bursa Malaysia surpassed 11 billion securities today in trades worth 5.83 billion ringgit, which analysts say could signal a strong return of retail investors' interest in small-cap stocks, particularly in favourites, the rubber glove and healthcare-related sectors. Mussing in particular has seen a lot of interest recently after announcing its foray into glove manufacturing. The stock had earlier climbed as much as 16.7% to an intraday high of 1.47 ringgit before paring gains to close 19.7% or 29 cent lower at 1.18 ringgit. Meanwhile, key index FBMK LCI settled 0.47% or 7.14 points lower at 1,510.97. There were 394 winners against 661 losers. The index's performance was in line with the drop in Asian stocks today as investors adjusted their risk exposure ahead of the US election. M Investment Bank says an inconclusive vote or prolonged political turmoil stateside could pose a significant downside risk to global markets. SameDarby is reportedly mulling a separate listing for its healthcare unit, Ramsay SameDarby Healthcare, that could raise at least 500 million ringgit. Bloomberg, quoting sources, reported that the conglomerate has held discussions with potential advisors for an IPO and that the listing could take place as early as 2021. However, deliberations are still at an early stage, which means details can change. Ramsay SameDarby Healthcare is jointly owned by SameDarby and Australia's largest private hospital operator Ramsay Healthcare Limited. Representatives from both companies declined to comment on the matter. Last November, CEO Datuk Jeffrey Salim Davidson said that SameDarby was looking to spend 1 billion ringgit every year on acquisitions and organic growth with a focus on expanding its business of selling luxury cars and healthcare.